Hey everyone, I just wanted to clarify something very quickly about the videos that you're about to watch. You know, on TikTok, you're only allowed 60 seconds. So sometimes there's something that you could have said a little bit better. Here's what I wish I could have said. I'm not going to go through and edit and redo the videos because the context is still there and the important takeaways are still there. However, I was asked about penny stocks. What do you think about penny stocks? And in the first video, I say I'm not a fan. Unless, what I wish I could have said, or will say now, is I like penny stocks just fine if you're experienced and you know what you're doing. For beginners who are looking to make tons and tons of money very quickly through penny stocks, that is where I am not a fan of penny stocks. I think penny stocks are incredibly volatile if you are inexperienced and don't know what you're doing. As you'll see as the videos progress, though, I think I kind of clear that up. Anyway, I just wanted to hop out ahead of the video to clarify some things because otherwise it's going to seem confusing. And thanks for watching. If you haven't, by the way, please hit the like and subscribe and have a nice day.
Yeah, I am not a fan of penny stocks. If you can get in at the right time, on the right stock, at the right moment, right before a breakout, then they can be pretty lucrative. That's called like a scalp. You just in and out real quick. Problem is a lot of people get in at the very worst time, right? They get in right at the top of the rally. The stock immediately crashes, and instead of selling, they think, well, it went up 50% this morning, so naturally it'll go up another 50% in the afternoon. Usually there's no reason for these stocks going up, other than a lot of traders are just jumping in really hot on a hot trend and then selling it and never looking back. It makes a lot of people get really, really hurt on penny stocks if they don't know what they're doing. And there's usually no merit behind the rally, so it's not something that'll continue over the course of several days. It really is just a pump and dump. Most of the stocks that I trade are under $10. Reason being, you can buy more shares. So if I buy, say, 100 shares of a company that's $30 a share, and it goes up $1, I've made $100. If it goes up $3 or $4, I've made $300 or $400. But that can take some time. On the flip side of that, if I buy a penny stock, and that's anything under $5, I depend on a smaller increase in price, right? 30 or 40 cents can pull in the same $300 or $400 in a lot quicker of a time frame. So my money isn't sitting and waiting in some $20 stock to go up $3 or $4 that could take weeks or months. With a penny stock, if there's a lot of volatility in it, I can do that same return in a lot less time. I don't trade the one-hit wonders. They're too risky, and people usually end up getting hurt on them. There's really no advantage to it other than a faster turnaround time. So in my experience, these $4 stocks go up quicker sometimes than these $200 per share stocks. Let's look at it like this. If I've got $4,000 and I buy 1,000 shares of a $4 stock and it goes up 30 cents in 2 days, I've made $300. On the other hand, if it goes down 10 cents, I'll sell and I'll take my loss. With that same $4,000 on a $20 stock, I can buy around 20 shares. I need that $200 stock to go up $15 to land me that same $300 profit. If I'm a day trader, I don't want to tie up my money for a couple days or a week or longer. If I'm working a full-time job, on the other hand, and I want to dabble with some stocks, and I don't mind having my money sit in a quality blue chip stock for a week or two or longer, then by all means, both methods are totally fine. It matters if you're trying to earn a living as a day trader, though. So if I were to buy a large cap stock, something $20 a share, and hope for a 10% gain in the price or 15% gain, I'm tying up my funds for an extended period of time. Generally speaking, these large cap stocks don't go up 10% a day. But the more volatile stocks, the 10 and under stocks, like you said, to your point, do. Of course there's more risk assumed with them. They are more volatile, to your other point. Doesn't mean that it's bad advice, though. If you're a day trader, you depend on daily income. If you're a long-term buy and hold investor, then yeah, buy something at 20 and wait a couple months for it to go up 10%. That's fine too, whatever works for you. Just remember, if you're trading these volatile stocks, the most important part, because there is risk involved, is to cut your losses. You have a much faster turnaround on the day trading stocks than you do on the large cap stocks, which is why it's beneficial for day traders. This post from the other day generated a lot of heat. I think a lot of people misunderstood what I was trying to say, which is as a day trader, I depend on faster turnarounds to generate daily income. Like this post from earlier today. It's about the ability to turn around that investment in a faster period of time. Let's take a look. Here's the trade that I made yesterday. I purchased 1,000 shares, it cost me $3,800, and I made 4.6% in just 2 days. Now let's use Amazon as another example. I would need the stock to go up $100 to generate roughly the same percentage gain and the same rough dollar amount. But here's what Amazon did today. So with less money and less time, I'm able to generate a larger percentage gain than this. And even though this profit is larger than this just took me 2 days and that amount of money. That's all I was saying. So you made a very good observation that really needs to be addressed. To be a good trader, you have to be a flexible trader. And this is something that I haven't talked about, so I'm glad you made this observation so I can talk about it. 2 weeks ago, markets were incredibly volatile. For that reason, I was sticking with the penny stocks, like you mentioned in your comment. But about a month or maybe 2 months ago, I noticed that Microsoft and McDonald's were bouncing around $15 every couple of days, right? Up 15, down 15, up 15, down 15. You have to adapt as a trader. I traded those two stocks back and forth for about a week or maybe two until they kind of slowed down. Then you got to be on the lookout for your next move, which for me was penny stocks. But now those have slowed down, so I'm on the hunt for other stocks to trade. Personally, I switch it up. Sometimes I do day trading, sometimes I do momentum investing or swing trading. When markets are quiet, I just buy and hold. Adaptation is key.